What's going on, people? It's GBP, baby. It's currently 10:24 p.m. on the 25th of May 2023. It's Thursday, and of course today price done exactly as we outlined yesterday, which is lovely to see. I'm going to start with the weekly very quickly because I'm aware that if you've watched yesterday's video, you'll pretty much know exactly what I'm going to point out. We finally took out this swing low here, which I had my eyes on, and we've completely traded through this imbalance which I had marked out here, and I've had my eyes on for a while now. So if we drop down to the if I put the drawings back on, you can see this red line, this red box delineates that imbalance, and you can see that we're starting to trade into this weekly wick range which I had marked out yesterday, which is lovely to see. And we're starting to draw towards this inverted fair value gap, which is again lovely to see. So let's drop down to the daily, see what happened. Obviously we had quite a bearish day. We traded up into Tuesday's low, which is what ICT calls I literally learned it today, what's it called, instant price. I'm gonna get back to you guys with that one. But it's when price trades up into the previous day, into the wick off a previous day like this. Let me make it a little more clear. You see how we traded it up into this wick? That's a balanced price range. I forgot the exact name of what he calls it, but then you can see we left it straight away, which is almost like it's like they're shaking hands saying, okay, let's go lower. So they traded into that, and then we've left it. So now I have got my eyes on the low of this, and obviously this massive bullish order block on the daily. But you can see that we've just traded down to the 50% of this wick, which gives us consequent encroachment, which is why we're probably experiencing a little bit of consolidation, maybe a little bit of back and forth movement. But we'll drop down to the lower time frames and have a deeper look into the market that we be calling all the time on this channel. So here is today's price action. Yesterday I stated I wanted to see these relative equal lows get taken out, and then I wanted to see us trade up into the buy side liquidity and trade into this hourly fair value gap. However, if we take out this sell side first and then move higher into buy side, then all should be good and we should continue to add bearish. Why is that this low should get taken out before we trade into this buy side liquidity in order for us to trade to that and then turn around. Like, you can see that we failed to actually reach the hourly fair value gap, which is unfortunate. But an entry above these relative equal highs would have still been perfect for a sell. It would have been nice to see price trade into it. However, it failed, which I guess is good as it shows weakness, and that's what we're getting from GBP. So we made this high at 5 a.m, which is in the London session, classic price action. And it also means that this fair value gap here, the hourly fair value gap, which I did mark out yesterday, it means that this should still remain a bearish fair value gap. So next time price comes up to these levels, we need to keep our eyes out on this as a potential place in the market where I'd want to turn around. You can see we then broke down. If we drop down to the lower time frame, we can see a nice break in market structure, which is here. If you do not know what a break in market structure is, I suggest you go and research yourself right now. Go on TradingView and mark out as many breaks in market structure as possible, because this is something you should be able to identify like that, so that when price does start to trade towards certain levels, you're aware that we've already broken structure, and when things like this happen and we start coming back up to price, you don't get afraid. Anyway, we took out the high. This blue line represents the relative equal highs. Traded up and left it, and then broke market structure here just past this black line, and we started to trade down aggressively. We also broke market structure here, so you can see we traded into this fair value gap resting here, but we haven't quite closed it yet. Turned around, took out a little sell side, came back up, offered a premium for another entry within this range here, and then broke down much more aggressively. So there was quite a nice setup around the 7:30 to 8:30 time. Of course, that's quite standard. 7 a.m. is the start of the New York session, so this kind of price action is not surprising around that time. And you'll see what I mean. From this high to this low, we had a premium offer in here, which would have been an option for you to get in, sell short, and put your stops resting above these highs here, and then you could have been short for the rest of the day running into these lows, and of course to our target that we marked out yesterday of the 50% of that weekly wick. So price has been pretty classic today in terms of action. Another entry was offered here, massive fair value gap, traded up into it and left it straight away again. Consolidated around this longer term low. This red line is a longer term low which was made on the daily here. That's where we consolidated. So and you can see our price has wicked through it and then left it. When price does this around an area, it kind of confirms to me that we want lower prices. Like I see this as balance in price range, because we trade up through it, down through it, up through it, down through it, up through it, and then left it. So I'm not really sure if price is going to want to necessarily trade up there again. When I am going to clear my charts after I've finished explaining, and then we can put some more ideas down for Friday, because there is some more news releases tomorrow, meaning that there will be a lot more volatility. But yeah, you can see as soon as we trade right into this wick, this range, we start to consolidate. And every time we go into consolidation, guys, remember this is just this is the market building orders on buy side and sell side, because it has plans in the future to either move lower or higher, and that's why having such a strong bias is so important. So that was pretty much today's action. I'm going to clear everything off my screen. So let's just do that. Sometimes it feels nice just to get rid of everything completely, have a nice fresh screen, and then we can see where we are. I will quickly put down my daily dividers, and then I'll be right back and we'll start to get some notes down. Right, so we are back on the weekly, sorry. I'm marking out this inverted fair value gap again, because this is where I want to see price draw to in terms of the long term. Whether that will happen tomorrow, I don't know just yet, but and I also want to just mark out that volume imbalance that we finally finished trading through. In blue, we'll drop down to the daily, and we can then see what we have lying around. We have the relatively cool lows here. This is the range which I drew out. This is that range I drew out yesterday, and the fact that, and we've just traded to consequent encroachment on that, which would be the 50% level, which is here. But since we traded to that now, that level is not necessarily important to me. So like when I reach levels like that, I tend to take it off my chart and look at the next levels which I'm interested in, which will be this south side liquidity. And then I need to see how we act around this. So we'll drop down to the 4 hour now, and let's have a look. So as we traded through this imbalance, the blue box that is, what if we are to remain bearish, which means if we are to trade into this low, which I've marked out with this red, I'm going to actually move the right in to the right side. If we are to trade into the south side liquidity, this box should now act as a as resistance. So this blue box should should now be an inverted fair value gap, I guess. You could argue it's not even a fair value gap in the first place, but we're treating it like it is, and therefore, since we traded through it, when price comes back up to it, we want to see some kind of resistance. So what I do now is I then look at the current trading range we're in. This is a 4 hour chart. I look at premium PD arrays, which is price above the market, which can help make this box act as resistance and again offer us some form of entry. The exact same thing I did yesterday, and of course price did it when it traded up around here today. But let's take a look at the current trading range we're in, look at the 50% levels and what we see. First of all, it's obvious that we have this massive bearish order block resting here, so we can mark that out. This should act as resistance. So price should not be able to easily trade through this, basically. Like if it does come to this, it should find a lot of resistance there, and we obviously have this beautiful little fair value gap resting just here. So I'm going to mark that out, and we're going to make that red. When it comes to Fridays, I am still a bit with it, because I don't tend to like Fridays personally, but we'll make sure we do some analysis tomorrow and have an idea of what Friday is going to look like. Then I want to mark out the range that we're currently trading in. And you can see we traded right through 50%, but we haven't traded back to the 50%. We haven't traded back to that level yet, if that makes sense. So we've traded on the downside. So sell side has traded through 50%, took out these sell stops, and traded to the consequent encroachment off that wick I was talking about. Let me which is here. I'm going to mark out this as well, this level. There's a lot of levels going on. Make sure you guys are paying attention. This is the 50% level of the weekly wick, and it's also the open of the bullish order block. I'll repeat that again. This is the 50% level of the weekly wick and the open of the bullish order block that started this move. So that's what I'm marking out here. And you can see we've practically traded to it. So this is why we're seeing resistance here, as in this is why we're going to start to consolidate. I can imagine that we're probably going to consolidate between here until we either break out either direction, which is why it's possible that tomorrow might be quite a consolidated day, but I'm not going to say too much. I'll drop down to the 1 hour. We can see the swing high resting here, which happens to be by this 4 hour fair value gap, so I'm going to mark that out as buy side liquidity. And I'm going to mark this out as sell side liquidity. Actually, no, that's incorrect. This is going to be our sell side liquidity, which seems crazy far, but we got to remember that this is all a bullish order block. Price has been fairly traded here. We traded down through it, up through it, down through it, and then up through it, and we've just traded into this 1 hour fair value gap here, which is why, like I said, we are seeing the resistance around here. So it's going to be interesting to see how price acts tomorrow between these levels, as in it's going to be difficult for price to want to go through here unless you know, some kind of news driver pushes it, or if it's going to go through down below, it's going to need to do it quite aggressively and push to get to this sell side liquidity. Like, you'll understand what I mean when you see price action tomorrow. However, it's important to recognize that when you're stuck between ranges like this, you know, we're probably going to be pretty range bound for a minute. Like, this is looking quite cramped, so to speak. But yeah, that's pretty much all there is to say, really. Obviously I'm going to keep my eyes on this buy side. It'd be nice to get a nice sell over here and then trade below this level. We can mark out the 50% level of this order block though, because that would give us the mean threshold of an order block. It's actually interesting how much you can break down each section, because you'll see that, remember, this range is a wick on the weekly, but then you come down to this time frame and you see that it's a bullish order block. So like, there's that, it allows you to break it down into areas and really hone in on price action to understand where you want to see price reacting. And of course, you can form your trades around that. I have been talking for a while now, so I'm gonna speed up and come to an end. This will act as consequent encroachment, but for me to want to see this happen, I want to see this buy side get taken, and I want to see us leave this level. So I'm just gonna go over one last time what I want to see, and then I'll close off the video there. And I'll just, okay, cool. That's Sunday. So what do I want to see? I want to see buy side get taken here, and once we're above here, I want to see this area act as resistance, which means the maximum I want us to trade to in this area would be 50%, and then I want us to start attacking this south side and trade to this level here. If price went straight down here, I'm not very sure on what I want to see, and I'll probably just talk about that in my weekly review. However, right now my bias is seeing buy side liquidity getting taken here, and then us trading lower and trading to the mean threshold off that bullish order block, especially since it's Friday and I'm not really sure how much the market's going to want to stretch its potential. But yeah, that's pretty much it. This has been GBP baby. Thank you for watching, and I'll catch you in the next one. Peace.